Investing today. Hello again, it's Martin North from Digital Finance Analytics and Walk the World. Welcome to our latest show covering finance and property news with a distinctively Australian flavour. Today I'm joined by Damien Klassen from Nucleus Wealth. Hi, Damien.
Hi, Martin.
Great to have you on the show today. And look, I wanted to pick your brains with regard to, let's call it investment philosophy, right? We're in the situation where interest rates have now been taken to very low levels. There's a significant amount of uncertainty around the world. There's a debate about inflation or deflation. Is gold the future? Is gold not the future? Where do we go? And there are many people now really confused about what they should do. So can I pick your brains on your investment philosophy and how you think about the problem and how you perhaps turn that into an opportunity?
Yeah, sure. So from our perspective, we're only investing in what we call high quality assets. So we have government bonds, Australian government bonds. We have high quality either international or Australian shares, and then cash. And our view is that between those sort of four assets, you have this core portfolio that can really should be able to manage as a central part of what you have, of what you own, and then around that, if you choose, you can then go and invest in, if Bitcoin floats your boat, or you want some small cap equities it's these much higher risk investments you can put around this and get a more stable and solid investment. And for some people, that core part of their portfolio is all their portfolio because they don't want the risky investments. For others, they can then, it's a smaller part and they can then choose things around it. But it's the almost the boring stuff, the government bonds, the cash, the high quality shares that really should underpin your portfolio. And that's what we really specialize in. And so for each asset, it's really a matter of trying to work out the quality and then look at the value that you can get from it. So there's shares out there that are extremely high quality stocks, for example, but they're just so expensive that we just can't bring ourselves to invest in them. And on the flip side, there's stocks that are so low quality that we just wouldn't invest at any price because the risk is so high. You can go in both directions. And so, for us, it's all about that mix of quality and value, and then trying to find the sweet spot where we can invest within those two.
Right. So the core point you're making is that within your investment portfolio, whatever it is, there has to be a center of gravity, which is more about security and longevity, rather than sort of speculating on the short-term moves, be they up or down.
Yeah, absolutely. And so, and for us, especially like if you're looking at people who are making longer term investments, so we're talking people who are trying to put their money away for a few years, or maybe it's within their superannuation, and so you're not looking for where can I make a quick buck. You're actually saying where can I put my capital that it's protected. I'm getting a longer term return, and the ups and downs aren't going to be too extreme within my portfolio.
Right. And do you tend to vary the mix between cash and bonds and equities depending on where you are in the cycle or what's happening, or is it a relatively fixed combination between the three?
No, we vary a fair bit based on valuations and based on positions in the cycle. You do have to have sort of a central sort of North Star that we put for every client that comes on. We look and say, well, for some clients, they're very low risk and very conservative by nature. And so we sort of set their strategic asset allocation, we call it, quite low. And then we vary around that. For other clients who come in who might be, say, a superannuation client who's quite young and might have 30, 40 years before they're going to be getting their money, the standard weighting will be a lot higher, and then we'll vary around that higher weight. But for both investments, the core idea for us is that if you can hang with the market on the way up and not underperform by too far, and then outperform on the way down, it gives you a much smoother ride. And by trying to avoid the big drawdowns, makes a big difference to your net position and just to your ability to sleep at night.
Right, and that means then that there is a little bit of calibration that people can do vis-a-vis risk versus returns within that overall philosophy.
Absolutely, and we do have the part for people who know a lot more about what they're doing to actually jump in and do that themselves. Actually set the so if they think so we'll run people through and tell them what we think the asset allocation should be. And for some people though, they'll actually go and change it and put in their own. That's perfectly fine. But we do want to be able to come, especially for people who aren't that intricately involved in investing on a day-to-day basis, and be able to put a structure around that makes sense for each individual based on their needs for income, whether they've got ethical screens they want to be doing, or their, and the most important one is their risk profile.
Right. The next question then, Damien, is fees, because obviously one of the big problems with investing, and particularly investing within funds, is that the fee comes off the top. So essentially, the quantum of the fee is really important in terms of overall performance. What's your philosophy with regard to fee structures?
Yeah, sure. So we charge a flat fee on our investment process, and the idea behind that is that we want that to be quite low. We're not interested in trying to get performance fees and other factors, because especially in a core portfolio, we feel that all that does is incentivize your manager to try and take risk, to try and get the performance fees, whereas we actually have a view that a lower fixed fee is actually a better outcome for most investors. And then on the admin's fee, we've generally outsourced as much of the admin as we can, and our idea is that we're trying to sit on the same side as the client. We want to try and get those fees down as much as possible. So currently we use mainly Premium, and they have a variable fee that sort of starts from about 0.33% and then goes down depending upon the types of assets you have and how much you're investing.
Right. So relative to some of the other players in the market, your fees will be sort of in the lower quadrant. Would that be fair enough to say?
Yeah, absolutely, and so we'd like to think over time we'll keep getting lower. So our idea is very much we want to try and keep pushing those admin fees down, and as we get bigger, we've already come back to our clients 2 or 3 times with lower negotiated admin fees, because as we get larger, we can negotiate better deals.
And then the other question I had was to do with transparency, because of course many people really have very little visibility of what's in their fund, be it a superannuation fund or some other fund. So transparency can be a problem. How do you deal with that?
Yeah, so we're what I like to call uncomfortably transparent in what we do. So you can actually see every single stock in your portfolio, every single bond. You get to see what the aggregates are as well within that. The most important thing, though, is we don't just want to tell you what's in there. We want to tell you why. And so you can jump in and look at every stock. You can see a portfolio summary. You can see the reasons why we've bought the stock. And if you want to, there might be some ethical reasons why you might want to screen those stocks from the portfolio. And you can actually go in there and do that. So, for example, some clients might have a look at the portfolio and see that there's a gaming stock in there, Aristocrat, and decide that no, they don't want exposure to anything to do with gaming, and so they can put a gaming screen on, which will then remove that stock from our portfolios.
So I assume, Damien, also that as part of the transparency, people can also get a sense of how things are performing as well.
Yeah, absolutely. So you can jump in there and look at your own portfolios, on any different range of performance metrics and any different time frame. We'll do a deeper analysis once a month in terms of our own portfolios, so the master portfolios, and which are the stocks that are doing well or badly, and whether we've been changing asset allocation. I guess, as I said, that transparency for me is all very much about giving people enough information that they can either feel comfortable with what we're doing, or if they do have a fundamental disagreement, can take their money and go elsewhere. And we try and make it quite easy to come in and out of the portfolio, because there are a number of people who are happy with what we're doing and just happy to have the transparency. And there's some who will, at times disagree with what we're doing. For example, if we're particularly conservative at a point in time and they feel that's the wrong call, they can either adjust our own portfolio, adjust the risk in the portfolios we've got, or if they'd like, take the money out completely and put it elsewhere.
Right. So in terms of people's flexibility to come in and also to go out, it's really one of the sort of key points, isn't it? There isn't really a huge barrier for exit.
No, that's right, and intentionally so. I always worry when you see the funds and they talk about being able to lock up your money for a month or more. And some, in the financial crisis, there were ones that got locked up for a year or more. And The idea for us is very much that we're in these high quality, very liquid assets. So whether it be government bonds, the blue chip shares, which is basically the top 1,600 globally, which equates to about the top 70 Australian stocks. And so the idea is that if something happens and you want to get your money out, you can either just take the stock itself, and we can in specie transfer it, so you can save yourself tax issues, or we can just sell it and pass it on, within the various different markets. The Australian markets is the trading day plus another 2 days, whereas some of the international markets sort of all vary. But basically, as soon as the stock's sold and the cash is available, then it's all transferred back. So we want people to be confident they know exactly where the exit is, and they know that they can get out the exit whenever they like. With the view that whole transparency, it's not about us hiding away and saying we've got a magic formula and just trust us. And by the way, if something goes wrong, you won't be able to get your money back. It's all about saying, no, we will show you exactly what we're doing, how you can get your money out, where all the fees are, and as much detail as we can to make people feel comfortable.
Right, and that includes, of course, international exposure versus local exposure, and that footprint globally, which in the current environment is probably quite important.
Yeah, absolutely. There's all markets right around the world are quite expensive at the moment, and just being able to have that, have more markets to pick from, and be able to pick and choose between different sectors that you just don't get access to in Australia. Australia does have a big focus very much on banks and resources, and whereas most other markets, that those sectors are quite small, and so you can pick up stocks that, whether it be something like a Kimberly-Clark or a Unilever or something involved in sort of consumer goods that you just generally don't get in Australia. They've all sort of been bought by these large multinationals, and so if you want to get exposure to the things you do and the products you use every day, often you do have to go overseas to get those exposures.
And my last question, Damien, is the old dilemma, is the future going to be inflationary or deflationary? Because there is a huge polarization out there, both in terms of opinion, and if you go onto all the YouTube channels, you can hear people squabbling about it. How do you deal with that level of uncertainty?
Look, I think the key thing for us is that there's been forecasts about inflation coming for the last maybe dozen years, and at some stage inflation will come. But at the moment, we're treating it very much as we're waiting to see the policies actually get enforced that will cause the inflation. US, for example, just had an election where Biden was widely thought he was going to get a landslide, but the debt default was actually going to be very close. And so a lot of the more extreme policies, which he might have been able to do with with huge margins in the House and Senate, he just won't be able to get through. And so it's those types of factors where we really want to see this inflation come through, because with so much unemployment, we're just expecting wage growth to be very, very muted, and it's very hard to see inflation coming if you're not getting wage growth.
Well, Damien, I really appreciate your time today, and I have to say that your philosophy really resonates with me in terms of dealing with the complexity of the current environment, and particularly I think people who perhaps up till quite recently would have been thinking that maybe cash term deposits was the way to go with rates so low now. It probably is time to get some sort of market exposure. Indeed, Phil Lowe, of course, has even said as much.
The central banks are certainly trying to get people to buy other assets and just pushing rates down until the point where they effectively have to. You're either not going to get a return at all in term deposits, or choose to start investing in some riskier assets. I guess our main thought is riskier doesn't mean you have to take lots of risk. It doesn't mean you need to go out and buy Bitcoin or go out and buy speculative small cap stocks. You can ease your way into this, and we would recommend that that most of your money does sit in very high quality, lower risk sort of blue chip assets.
Thank you very much for your time, Damien. We'll put the links and things below, and I guess we'll come back from time to time and see how things go. But appreciate your time today.
Thanks a lot.